one of the things that I listened to some of your podcasts and learned a little bit about your book, and everything really resonated with me. And I was hoping that you could take us through um, some of the key principles. I have roughly 4 or 5 key principles that I took from it, but I know you probably know them by heart. But I would love for you to not just say them, but to give us examples of in your career where you kind of learned that lesson enough to be able to inspire you to actually put it down in a book and give it to the rest of the world. Um, and your first lesson was trust, that you put forward. Could you just talk to us a little bit about the book? Talk to us about the 4 or 5 key things that you write about, and help us unpack that.
I believe that trust, I like to say, is the currency of business. Um, in my book, I talk about Howard Schultz at Starbucks saying that transparency is the currency of business, and I actually believe that too. But I think transparency is, really is one of the things that creates trust. And I want to talk a little bit about an experience that happened to me that really, I would say, inspired me to write the book. And that experience, when I tell you the experience, I think you'll understand it a little bit more, especially this word trust. Um, so I had plenty of things in my career that influenced the way that I thought about leadership, but the most important thing happened was a challenge that I faced during the financial crisis in 2008. And up until that point, I was the number two person at Prologis. So I was the president, chief operating officer, and I had risen through the ranks as a regional VP, CFO, et cetera.
How big was the
And
company roughly
oh,
at that point?
well, the well, it was a startup company when I joined it in 1994. By the time I became CEO, we had $50 billion in assets.
Okay.
So we were probably, number 200 or 250 or so in the Fortune 500. So
And you were
very large,
publicly listed?
publicly listed company, New York Stock Exchange. Still is today. One of the largest companies on the New York Stock Exchange today. But for the first 15 years of the company, we were absolutely a darling on Wall Street. And, we had a sound strategy. We had great people, terrific brand, good board, market leader in our industry, et cetera. And I do believe a lot of that had to do with really good leadership. But then um, we had a change at the top. And I was at that time, I was promoted to president COO, and then I reported to the CEO of the company. And you know, looking back on it, most people don't leave companies, they leave bosses. And as I said, I was the president, my boss was CEO. And I loved the company, but I just couldn't reconcile with him what good leadership meant. I mean, he had just a different view of it. And on the one hand, he was one of the most brilliant people I ever met. And on the other hand, I felt marginalized by his need to look brilliant. And many times I didn't feel listened to. Many times I didn't feel trusted. I felt micromanaged. Many times I didn't feel like I agreed with the decisions, but no one was really listening. And most important thing is I wasn't being told the truth. And I could see that, we could all see a change in the culture because the whole management team could see it. And we began to act in silos and we didn't communicate as a team. We didn't talk in the open. We made decisions behind closed doors. And frankly, it led to poor investment decisions, very poor in 2006 and 2007. We put way too much debt on our balance sheet against the wishes of our CFO, but because our CEO didn't want to issue any equity at the time. And in the end, at the end of the day, those decisions cost the company dearly. And when the Great Recession hit in 2008, we were ill prepared. And I resigned in January 2008 because I went to the board and I said, look, I cannot work in a management team that doesn't trust itself, if you will, or where we don't trust the CEO is the bottom line. And interestingly enough, our stock was at an all-time high at the time. This is again January 2008. which at the time our market cap was, I don't know, $20 billion, something like that, which equated to a stock price of $72 a share. It hit an all-time high around then. And from the outside looking in, we still look pretty good. But from the inside looking out, we were a disaster waiting to happen. And I didn't know how much of a disaster it would be. Obviously, the S&P 500 was down close to 40% in '08, but our mistakes were manifest themselves in a much greater way. And after I left the company in 10 short months, by November of '08, our stock was down 96%. We were the third worst performing stock in the S&P 500. Stock was at $2.20 a share. Front page article in the Wall Street Journal. We're next. This darling of Wall Street has gone bad. And on November 8th, I got a call from the board of directors, and they said, "Look, you were right a year ago. We're going to part ways with the CEO, and we'd like you to come back and run the company." And I got to tell you, I knew it would take a Herculean effort, uh, but I agreed to do it because I had hired many of the people that were there, and I could see that they had lost confidence in leadership. And I knew I had a great management team. And looking back on it, really crucible moments, I think, are the times when we're the strongest and where we have an opportunity to shine. Even though the funny thing is, you never wish it on anybody, including yourself. But yet, when you look back on it, especially if you succeed, it turns out to be one of the best moments of your life.